Breaking news here on Martyn Lucas Investor. Chinese bank, the People's Bank, rescued the economy, or has it? The money printer is on, rates have been slashed, stimulus around the world, BABA is moving up, Chinese relating stocks are moving up. Why do we care in the US? Well, we should care in the US because it will affect us. It could send inflation back up again. All kinds of stuff. Shall we talk about it? Yes, I think we should. We'll start by looking at where we are this morning. As you can see, I'm breaking all-time highs again. As you can see, my portfolio is up again. We're beating the market again, and 119,766 all-time highs again. No options here, no shorting stocks, no pumping and dumping. I simply own the S&P. I'm all invested. Every penny I have is in Robinhood. Robinhood is my bank. It's how I pay for things. It's my bank, and I buy the macro dips when it goes down 10, 15%, and then I use margin, turn it on. That's it. Very simple strategy, and I've been consistently making money. I never lose money. At least I haven't since I rebalanced my account back in January, and I'll never lose money again. I spent the first 2 years learning the ropes, and now I don't lose money. I will never lose money. Let's talk about what's going on with China. If you'd like to tap the like button, that would be great, and consider subscribing. But basically, overnight, what's happened is the markets are stimulated, not just here in the United States, but all around the world. Let me share with you what's going on. So, let me bring up the heat map. You can see the heat map. There it is. Let it just warm up a little bit. As you can see, Apple's up. Most things are neutral. Not a great deal at the moment in the United States. We are up slightly, but not a huge amount. But let me share with you the global markets, which for some reason, why can't I see it? Oh, I know it. It'll be in there. We'll come back to that in a minute then. All right. Just take my word for it for a minute. I'll come back to it. But the global markets are all up on this news. Essentially, what has happened is this. And be very, very careful. I have put a warning out this morning. I've said it's a China emergency bailout, and I have included the word warning because it's a warning if you are chasing Chinese stocks. It's also a warning if you're chasing the rally right now. Let me explain what's happened. This is the Chinese version of Jerome Powell turning on the money printer. Essentially, that's what's happened this morning. And the money printer is back on again. I think I've got a nice little thing here, haven't I? Have I got a nice little thing here? There you go. Here's my money printer. There we go. The money printer is essentially back on again this morning over there in sunny China. What that means is the Chinese economy has been struggling for years, a lot to do with their real estate as well. You've seen all the images of towns with half-built houses, people basically priced out of the market, run out of money, houses half completed. Chinese economy is in a right state, and this has been going on for a while. And the Chinese people are not easily convinced either by it. They've been given bailouts before, and they've been very concerned about it before, and people are very, very fearful. Not like in the US, we get a bailout, we get stimulus checks, and we all start spending our money. In China, they're a little bit more reserved on it, so they're harder to convince. And of course, anyone who talks against the Chinese government can be arrested. So there's all kinds of issues going on in China. But essentially, the People's Bank has turned on the money printer, but something else has happened at the same time. It's a multiple attack. It's not just turning on the money printer and where is the money going and where is the stimulus checks going. I'll explain that in a minute. Not to the people. I'll explain how it works. But also they're reducing and slashing rates as well to basically encourage people to spend, encourage people to borrow, encourage people to lend money and get the whole economy moving again. But of course, actions like this don't always end well. You know, you can't just fix things with turning the money printer on. Hang on a minute, we've been doing that in the United States forever and we seem to keep going up. Maybe we can. Until we can't. Well, essentially, they've turned on the money printer and they've given out lots of free money. Now, where's the free money gone? How does it affect the United States? How does it affect BABA? Well, we're going to talk about it in a second. But essentially, they've started by giving money to institutions and brokerages, literally giving them literal stimulus checks. And what it's done is it's encouraged the world today to rally up. Now, this typically, a rally like this and a stimulus like this typically lasts 7 days to a week, and then it'll go sideways and then go again. Now, this is great news initially, potentially, maybe, with a big warning for those of you in the United States, but don't chase it. As an investor, you should already be in. I'm already in. I'm enjoying this now, waiting for a pullback. Just don't do anything. You're already invested. Investors leaving their seeds in the ground are loving it. Traders will get their hands burnt because greed will always bite your hand off. Essentially what's happening over there in China, and we'll cover the details in a moment, they're giving stimulus checks to institutions and brokerages and businesses to buy back their own stock cheaply, all right, with very cheap money. They're also giving you money to brokerages to buy the stock market, literally to pump the stock market. They're not handing out money to the citizens, to the people of China, not like they did in the US. In the US, they gave people money and people spent money like crazy. They're not doing that in China because people would be a bit more reserved and a bit more like, I'm not sure what to do with this. So they're giving it to institutions and businesses to buy their own stock, to pump the market. And we're going to give you some evidence of that in a moment and show you how it might affect us and where it goes from here. So be very, very careful if you're chasing it. It's great for me as an investor because I'm making all-time highs all the time. And I'm about to hit $120,000, which means I've got $200,000 now invested, which is amazing, right? Can't believe it. Anyway, let's go and show you some details. And then we're going to discuss BABA. And you might want to try investing into some Chinese stocks. Remember, they've been down recently. Now you've got a rally. But first of all, let me give you this headline. This is just out. Just an hour or so, a couple of hours ago, actually. China moves to boost ailing economy with property stimulus measures. All right. Chinese official authorities unleashed unusually broad measures designed to inject momentum into the world's second largest economy, announcing on Tuesday the most significant stimulus package since the pandemic struck almost 5 years ago. So this is very, very significant. This is not the normal stimulus. This is not just handing out checks. This is also reducing rates and encouraging businesses to buy back and encouraging people to invest in the stock market. It's a multi-pronged attack. Does it suggest that Xi Jinping has now realized how bad the Chinese economy is? Is it good for the US? Well, we'll get onto that at the last part of the video. These measures, which include cutting interest rates and supporting the beleaguered property and stock markets, come amid signs the Chinese economy will miss the government's growth target of 5% this year. The decision by the People's Bank of China to cut its benchmark interest rate comes less than a week after the US Federal Reserve cut interest rates by 0.5 point. Now, this is important because we could have a race now to the bottom. Both economies could be racing to drive interest rates down, and then we could get a Paul Volcker. We could get a spike in inflation. So again, you're already invested. You're not chasing it. You're letting it rally. You're enjoying the increased dividends that you're going to get from the S&P. You're doing nothing, all right? You're waiting for the pullback. Enjoy the rally. Do nothing. Don't chase it. Hungry people are chasing stocks today and they're going to make mistakes. I'm not, and I'm up, and I'm loving it. The decision showed China's central bank has shifted from a hang in there until the Fed blinks stance, said Larry Hu of Macquarie Group, to one of fight deflation now. Is it their problems are worse? Yes, their problems are a lot worse, but how does this affect America? We'll come to that at the end of the video. While much of the world has been battling inflation, Chinese authorities have been struggling to boost demand and stem a fall in prices amid widespread gloom about the economic outlook. Today's policy announcements are more positive than expected, although this alone may still not be enough to end the longest deflationary streak since 1999. Hugh wrote in research note, but it could be the beginning of the end, as it signals the rising urgency among top leaders to fight deflation in China. Okay. Recent data has revealed the Chinese economy is slowing faster than expected. Growth in industrial output and retail sales have slowed, while the stock market and investment in real estate took a nosedive. Unemployment is up and deflation remains an urgent issue. Okay, I covered all that at the beginning. I'm going to show you some stocks in a minute that you might be concerned with. Chinese ability to achieve this year's growth target of about 5% is now in doubt. Goldman Sachs and Citigroup have cut their projections for the Chinese economic growth this year to 4.7%, while Morgan Stanley expects 4.6%. And you can see the little graph just there. The coordinated stimulus measures announced Tuesday marked a departure from financial authorities' previous approach to drip feeding piecemeal support, measures. Julian Evans, Pritchard and Zitcham Huang of consultancy Capital Economics wrote in a note, it was the most significant stimulus package since the early days of the pandemic. Okay, but on its own, it may not be enough. It will probably be insufficient to drive a turnaround in growth unless followed up by greater fiscal support, they wrote. Still, markets reacted favorably to the new China's benchmark CSI 300 stock market index and Hong Kong's Hang Seng index both rose almost 4% on the news, hitting a level not seen since the start of 2022, while the Chinese yuan reached a 16-month high against the US dollar. We've seen how the US dollar has been recently affected against the pound as well. If you go into the UK right now, it's becoming more expensive, whereas if you're going from the UK to the US, it's great that way round. All right, so understand how the dollar is bound to go down because rates are going down and the dollar is becoming less attractive. Pan Gongsheng, governor of the People's Bank of China, said the new stimulus measures were designed to support the stable growth of the Chinese economy. Now, there's nothing we want more than a strong Chinese economy. It's not like in the US, we want the Chinese economy to crash. We don't. However, we could have a race to the bottom now, and if we're not careful, this could increase inflation again in the United States. However, the way that the Chinese government are doing it this time, rather than giving people the money, because they know that doesn't work, they're giving businesses, brokerages the money to buy the stock market, not directly to invest in the business, but to buy the stock market, to raise prices. That's good. It makes it look attractive. It looks like people want to invest in the US companies. Not building them out, because if we build them out, we could ignite inflation, but just to buy the businesses themselves. An important factor to consider is that we need to promote a moderate recovery in prices, he said at a rare news conference in Beijing on Tuesday, where he sat alongside the heads of the National Financial Regulatory Administration and China Securities Regulatory Commission. The PBOC cut its benchmark rates from 1.7 to 1.5. There you go, making it cheaper for households and companies to borrow money. To further encourage lending, the PBOC said it would cut the amount of cash that commercial banks were required to hold in a reserve by 0.5 percentage point, potentially unleashing $142 billion in new lending. It signaled it could cut the reserve requirement ratio by the same amount again by the end of the year. Now, we are expecting more rate cuts in the United States as well. This is where I'm talking about we could have a potential race to the bottom. Now then, as you can see, the markets are rallying at the moment. I want to share with you the markets around the world. You can see here, there you go. The Nikkei is up 0.27. Hang Seng is up 4.13. You can see things moving. The FTSE is up in the UK. That's the Financial Times Stock Exchange, up. And of course, we're not open yet. We've got 29 minutes, but expect the markets to open up this morning. The ones at the top there is New Zealand and Australia. I just need to add China into there. I've only got Japan for some reason, and Hong Kong. I'll need to sort that out later. Anyway, right, what we're going to do now is show you how this affects the US and how you might want to invest in this if you're buying Chinese stocks. So let me show you, first of all, if we go over to, we'll keep on our main position, but BABA, this is one of the most popular stocks that can benefit from this. Look at that. Alibaba. All right, it's up today, 5.96. A nice rally. I still wouldn't buy it. Absolutely would not be chasing anything today. I'm an investor, not a chaser, not desperate. Money comes to me. I don't chase money. Never, ever, 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 ever lose money. Rule number one. Number two, remember rule number one. It's very straightforward, really. If you never lose money, you'll always win. It's easy. The hard part is to keep your money. Making money is easy. There's the portfolio. We're about to hit $120,000, which will be another all-time high. This is an all-time high. But let's have a look at BABA right now. Is it worth buying today? Can you take advantage of this? Well, hopefully you've tapped the like button so far and you've considered subscribing to the channel. But let's have a little look. Let's have a look at BABA this morning into some more detail. I'm not going to cover what the stock is. This isn't about that. This is about the movement of the stock. I think we all understand what BABA is. But let's look at it, all right? The valuation. It's currently undervalued by 28%, and it's a reliable. We have no DCF warnings here or nothing like that. It's regarded as a decent valuation, $125. So we are 28% undervalued. Now, this rally could continue. We do expect this rally to continue. So, you know, it's good. We can expect it to continue for about 7 days, then consolidate and then go higher. This isn't a flash in the pan. I'm not expecting this just to go up and back down again. I am expecting it to go up. That doesn't mean to say I'm going to chase it though. Just because I expect it to go up doesn't mean I'm going to chase it. Best case scenario, undervalued by 52%. Worst case scenario, overvalued by 10%. I wouldn't be concerned about that though, all right? Okay, scroll on down. Let's look at the state of the business. Is it worth buying? Well, the revenue is up 1%, not really growing very much. It's kind of flatlining. It is moving, but and some of our businesses, we don't mind. Remember, this is in... this will not be in US dollars. Remember that. These currencies will be in the local currency. All right, just remember that. Okay, it's very, very important. Operating income is down 14%. Net income is down 13%. Financing cash flow up 5%. Investing cash flow is up 222%. Operating cash flow is down 6%. Let's look at the balance sheet though. 1.8 trillion in assets again, and I repeat, these are in local currencies, of course. All right, so to just understand that. 1.8 trillion, and we've got the assets there, of which cash is 448 billion. Decent amount of cash there. Liabilities, long-term debt, 178 billion. 21% of its liabilities are debt. That's manageable. But the liabilities, it's actually not a bad balance sheet so far. So far, it's not a bad balance sheet. But look, gross margins are all falling down. Will the stimulus check help put the price up? That's very all well and good. But then if the price keeps rallying, but the business doesn't grow, essentially, what's the point of that? I'm not so sure. But anyway, I wouldn't be chasing it, like I've said. Please tap the like button. We've got 112 watching, just 32 likes at the moment. Let's get 100, and then YouTube will suggest this out. It's a big day today for investors with the Chinese market stimulating the economy. I'm making this video during a live stream, so it would really help if everybody jumped on the like button. Anyway, 38% gross margins and falling. All right, we were up around the 63. Let me just bring that onto screen. We were up to 66, 67, 68, 72. We've been falling. No one's spending in China. Operating income, 11%, 444. I mean, it was up like, look, 46% all the way down. These aren't good numbers at all right? It's not a strong business. There's no moat here. There's no room for error. Everything's falling down. FCF margin down. RO, I mean, all profitable, but declining all the time. So just be very, very wary of this business, all right? The Chinese government are trying to stimulate it, but that doesn't mean to say you should buy it, all right? Some of you will, of course, you'll think this is great. I won't. 53% profitability, falling, don't like that. Balance sheet, 57, not bad. It's not going to go bust anytime soon, but be very, very careful if you are chasing it. 11% downside, worst case scenario. On average, 22% on the upside, 70% on the upside at best. Are we best? No. At best, we're average. I would rather know I'm going to make 13% a year on the S&P, and with my macro dips buying, increase that to 20%, which is what I'm doing. 20 to 30% a year I am making on the S&P by buying the macro dips. That's what I am doing. So I can outperform this. I wouldn't risk it. I don't need to. I've got a good dividend. There's no risk. There's nothing here for me to jump on in. I'm not a fan of jumping onto Chinese stocks at all. Do we have a short interest to show you? It doesn't look for some reason like I do. I'm sorry for scrolling up and down. No, I don't. Okay, let me come back to Baba a moment. There you go. You can see it's still rising. So we've talked about the opportunities for you. We've talked about what's going on with the economy in China. Now let's talk about what you can do as an investor in the United States. All right. Let's come back over to here and show you my portfolio. We're rallying today. We're going to get a rally. We're going to head to a Santa rally. This is good news if you are an investor. I don't think it's good news if you're a trader. And I'll tell you why. There's opportunity to be made. Yes, no doubt about it. Buy the rally, dump it, whatever. But if you're doing short-term gains, you're going to pay tax. I know you could do it on your IRA and do it tax-free, but just be careful. I think it's an opportunity to stimulate the market and just remain in and do nothing. Remember, just because you can trade doesn't mean you should trade. And I don't really feel that this is a good opportunity. I don't think this is a good thing to jump in. It's very, very risky right now. But if you are an investor, you'll stay where you are. You'll enjoy this. There'll be some pullback eventually as we go into the election. Then there'll be a rally. And all you're looking for, like me, if you're a long-term investor, you're looking for an overnight flash crash, which will come. There will be a correction. There will be a flash crash. And remember, it doesn't have to happen for me. I'm already fully invested. Every penny I have is in. But if I'm going to keep reducing my margin, which I'm doing every month, I'm building in more and more buying power that I can use. I'm looking for a flash crash. I'm looking for a correction. That's when when I'm going to buy. I don't buy the pumps. I don't buy the rallies. I don't chase the market. I let the money come to me. It always does, always will. As George Clooney once said in Perfect Storm, the fish will gather again for the Andrea Gale. Didn't work out for him so good, though, got to be honest. So not a good analogy, but you get my point. So be very, very careful. But that's what's going on today in the economy. The money printer is on for China, and it's stimulating all markets, stimulating Chinese stocks. Be very careful. But good luck to everybody. Click above my head for all the links down below in the description. Over here, I'll put more videos that might interest you. And I've just done why cash is not king. And I prove it to you. I think if you watch all the way through, but at the end of the video, I will convince you that cash is not king. Remain invested. I'll put that down there. Until next time, as always, take care of yourselves and each other.